Hey guys, this is Dave from MortgageGuy.com, and with rates being as low as they are right now, at the moment when I'm speaking, the 15-year is hovering in the high to mid twos. The 30-year is hovering right around 3, a little bit higher depending on the days and the cost. So right now is an amazing time to refinance. I actually refinance my own home, right? So because I truly believe rates are at a floor and they really can't go much lower. With that being said, a lot of people ask me, well, what's the deciding factor or factors that make it where refinancing would make sense? Okay. Some people would tell you it has to go down at least 1%. So go from 4.5 to 3.5 or whatnot. That's a fine indicator. That's not really the total deciding factor. So there's a couple things to take into account. If you're cutting your term down, so you're going from a 30-year that you've been in for a couple years and going to a 15-year, with a lower interest rate, great benefit. If you're taking cash out, now would be an amazing time to do a cash out loan because rates are this low, all right? So you're able to borrow money at the cheapest possible interest rate that we've really ever seen, okay? So that's another benefit. But let's just say you're looking at the normal 30-year to a 30-year mortgage. What are the deciding factors, okay? Now, number one is I want to see cost versus savings. How long is it going to take you to recoup that money that you're spending on the new refinance, okay? And that's very easy. That's dividing the closing cost, the total closing cost, by the amount of your savings, okay? That's just an easy calculation you can do yourself if I'm already not your lender and doing it for you, okay? Now, with that being said, I ideally want to see that cost versus savings recouped in 5 years or under, okay? Because chances are over 5 years, you may not be in the house, okay? Now, this is very, very important because even though rates are maybe lower than what you have, or they look great, sometimes financially, it's not always a good decision, okay? If you plan on selling the home in 4 years, and it's gonna take you 3.5 years to recoup it, or longer to refinance, I would probably not refinance at that point. Okay. Now, if you're in an ARM and it's going to adjust in the near future or even far future, 5, 6 years from now, 7 years, 10 years, I would refinance now because I don't think you're ever going to see fixed rate mortgages be any lower than they are now. Now, going back to my other point, many lenders, and actually I saw this with Quicken, this one bothered me a lot. It was saving the client $75 a month, but it was going to take him 10 years to recoup the cost versus savings for that. And $75 is not a lot of savings. So I, in that situation, told him you should not refinance. Okay, look, I get paid to do mortgages for a living, but I'm never going to steer a client into a bad refinance. Okay, so does it make sense for you to refinance or not? Number one is have a lender work up some estimates for you specific to your situation. What do you owe? What's the home worth? Put together some general estimates, okay? From there, you should be able to tell with cost versus savings or some of those other factors if it makes sense for you to refinance, all right? So that is my 2 cents on how you can decide if refinancing makes sense right now with rates being as low as they are, all right? Call or email me anything. Comment down below, and if you find my videos helpful, I'd love to be your lender. Thanks, guys.